Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra. Well, the stock on our radar today is Patanjali Foods. Remember that amid the Adani Group crisis, the rout in the shares of Adani Group, there is one stock which has perhaps gone unnoticed, and that is Patanjali Foods. The shares have been on a falling trajectory recently. In fact, the stock has been in the corrective mode ever since it has reported its December quarterly results, and that were reported on January 25th. Remember, the Hindenburg's report was released on January 24th of 2023, and thereafter there has been considerable fall in the Adani group of shares, but Patanjali Foods too has had its fair share of fall. If we see the last 5 days, there has been a cut of 13% in the company's stock. In today's trading session as well, we've seen a sharp fall as well. But in the last 1 month, the stock has slipped almost 24% in one last month. Remember, the company reported a mixed bag in terms of the results. In the quarter ended December 31st, 2022, Patanjali Foods had reported a 15% increase in the net profit at 269 crore rupees for this quarter, as against 234 crore rupees that were reported in the year-ago period. Now, the company's revenue from operations rose 26% to 7,929 crore rupees in Q3 of FY23, as against 6,280 crore rupees in Q3 of FY22. However, the numbers were below analyst estimates as the pressure could be seen in high margin business. Its operational performance also remained under pressure, and that was due to the higher cost of raw material and the other expenses as well. Now, we did speak to Abhishek Jain, who's the head of research at Arihant Capital, who said that the weaker performance of the company in Q3 saw lower margins, especially in the food and the oil segment. The food segment margin was very disappointing to 11%. Now, management, on the other hand, has expressed that 15 to 18% margin seems to be sustainable in their earnings call going forward from here. But commenting on the muted results in the December quarter, even Deepak Jasani, head of retail research at HDFC Securities, said that the EBIT margins were also under pressure due to unfavorable product mix and also carryover of the previous quarter as well. Remember, the oil business margins recovered sequentially but were still below the average due to the volatility in the raw material prices. Remember, the stock shut at a lower circuit of 5% at 911 rupees on February 3rd on Friday as well. The scrip is down 25% since announcing of its results, and the stock is down about 40% from the 52-week high levels of 1495 rupees that it had hit in back September of 2022. Now, analysts do suggest that the stock has been hit hard, and that is on the back of multiple factors, including the company's financials and the pressure on margins and business overhang as well, and on the promoter stake sale to actually comply with SEBI's norms being the main ones as the key concerns right there. Experts also say that the market has been hammering the high PE or high value stocks, and selling should largely be from the H&I segment. There has been a lack of institutional interest, especially in the mid-cap names so far in this year. This has also led to a fall in the prices as well. And other than this, experts do say that the overhang of the offer for sale is also another factor that has been weighing on the stock. Remember, Baba Ramdev led Patanjali Ayurveda, acquired Ruchi Soya, and then renamed it Patanjali Food, and merged its FMCG business into the edible oil player as well. Now, also when you talk about the March 2022, when the company really raised 4,300 crore rupees via the follow-on public offer, this became a debt-free entity as well. Patanjali Foods had to bring its non-promoter public shareholding to the minimum shareholding of 25% by December 22, but that deadline has also been passed. The company's management has said that this will be completed within a month or two going forward from here. But on the FMCG front, if you see, the management has guided for high-teen revenue growth driven by the distribution, expansion and expanding product portfolio. FMCG contribution is now 20% of the revenue and is expected to reach 50% in the next 5 years, with a margin of 15 to 18% in the long term as per the management. Now, what should investors really do? Well, most of the experts have come on our platform and did say that the stock could be looked at as an adding on opportunity in these kind of cuts in the tranches close to 800 to 900 rupees with the long term, and the expectations of better performance from the all three segments going forward from here. Now, given the predominance of the oil business, even after 2 years from now, the valuations of Patanjali Foods may continue to be short of its peer FMCG companies, and that is despite the guided faster top-line growth going forward from here. So that could be a big overhang. But for now, Patanjali Foods share remain under pressure.